Hi, it's Terry Ryder from Hotspotting. On Saturday morning, I did a live interview on Channel 7 on the Weekend Sunrise program, which they introduced by speaking about the reports of heavy price falls in some parts of the country and booming markets in other areas of the country. And their first question, what's the real state of the market? Well, the reality is, all of those things and many more other things are going on in markets at the moment. We do have areas with price decline, notably in Sydney, but we have more areas around the country where prices are rising than areas where prices are falling, some of which are very strong boom markets, others are rising more moderately, and there's plenty of markets which are pretty much marking time going sideways. But it was an interesting interview on Channel 7's Weekend Sunrise. As always, these segments are short and snappy, and you've got to try and impart as much knowledge and information as you can in 4 or 5 minutes. But I was really interested that the very first thing that they said to me, the interviewers, when they opened the segment, were these words: finance expert Noel Whittaker says if you want to invest in property, you should stop reading the headlines. Would you agree with that? Well, what an opening to give me. Anyone who follows my broadcast knows what I think of mainstream media's coverage of the housing industry, and I wholeheartedly agree. When I'm asked by people, what are my rules for successful property investment, my answer always begins with rule 1, stop reading newspapers, and I'm deadly serious. If you are absorbing information from our major national and metropolitan newspapers on the housing industry, you're going to be filling your heads with negativity and misinformation. So if you want to do well in property investment, I recommend that you stop doing it and start doing some real research and get real information. They mentioned that we just released the latest edition of our price predictor index and asked how we use that to forecast the areas where prices will rise and when they fall. And what I told them is that it's a very simple but very effective method by charting sales demand, sales activity for every town and suburb in Australia. And we look for the patterns there where sales demand is rising, prices are likely to follow. Where sales demand is falling, price growth is likely to slow down or stop, or in some cases, as we've seen in some of the parts of the Sydney market recently, prices will start to fall if the demand falls away. And that's the pattern we saw. We identified that pattern in Sydney long before it showed up in the price data, long before media started talking about prices declining in Sydney. We were warning that demand had been falling in Sydney already for over a year, and that the strong price growth, the boom price growth that we'd seen for 4 or 5 years was going to come to an end very soon, and that's exactly what happened. But what the price predictor index is telling us is that there are other markets around the country where sales demand is rising and prices are reacting very positively to that. Areas with big price growth and others with big price growth to come. So on Weekend Sunrise on Channel 7 on Saturday morning, they asked me to run through some of the areas where prices are expected to fall as identified by our price predictor index, and also examples of areas where we think prices are likely to fall. So we had a quick run through of some locations in both categories, just an example of the growth areas and also the danger areas. So in terms of we were asked for 5 locations around the country where we expect prices to rise because of this pattern of rising demand. We nominated Queanbeyan, just outside Canberra, speaking about the fact that as the Sydney market winds down, regional New South Wales is cranking up very strongly. There are lots of growth markets across regional New South Wales, and one of the best of them right now in terms of the sales demand patterns is Queanbeyan, which benefits from being in New South Wales, but also benefits from being effectively part of the Canberra metropolitan area. Then turning our attention to Victoria, we nominated Ballarat as a market that's indicative of what's happening in Victorian markets. Melbourne winding down, regional Victoria cranking up, and some of the strongest price growth we've seen anywhere in Australia in the last 12 months has been in regional Victoria, where some locations have risen as much as 25 to 30% in their median prices in 12 months. And other locations expected to follow suit, headed by Ballarat, also Bendigo, where sales activity has picked up a lot. In Queensland, we mentioned the fact that we believe that the Sunshine Coast is the strongest market in Queensland right now, and that most of the suburbs of the Sunshine Coast have had double-digit growth in their median prices in the last 12 months, headed by the Canal residential suburb of Minyama. For Western Australia, we talked about the fact that Perth is moving into recovery mode after several years of downturn, and we're seeing all sorts of evidence that the Perth market has moved beyond the bottom of the trough and is now starting to rise. And we're starting to see evidence of price growth, particularly at the top end, but we expect suburbs like Joondalup in the north to be one of the leaders of the recovery. And in South Australia, we talked about the fact that we believe that Adelaide is the most underrated property market amongst capital city Australia, and that areas like Mitchell Park and the city of Marion are going to be showing good price growth with rising demand in those areas. In fact, Adelaide, as I mentioned in the television interview on Saturday morning, is the most active market in the country. There are more suburbs with rising demand than any other jurisdiction, any other market jurisdiction in Australia. Okay, so then they asked for 5 locations we felt people should avoid because demand was falling away, and other indicators such as rising vacancies and falling prices, and we nominated the reality that some of the apartment markets in Sydney are trending rather negatively, and we used the Homebush precinct as an example of that. In Victoria, we talked about the reality that while Melbourne prices overall are showing a lot of resilience, there's not any great evidence of major price decline in Melbourne. There's a little bit, it's fairly moderate, quite well ordered, but it's the real top end, the multi-million-dollar suburbs where we've seen demand fall away the most. And so we nominated Hawthorn and Hawthorn East as a precinct, as one that was indicative of demand falling away a lot, prices starting to fall, vacancies trending upwards. In Queensland, talked about a couple of places. The Brisbane CBD still, although the oversupply of apartments is gradually being soaked up, vacancies are still very high, still a market to avoid. There's evidences of prices coming down, although not alarmingly so, just quite moderate declines in median prices in that inner city apartment market, but still with vacancies remaining quite high, it's still one to avoid until vacancies get down to a much more acceptable level. And also mentioned Gladstone. I told the Weekend Sunrise program that Central Queensland is actually showing strong signs of recovery. Many of the locations that were adversely impacted by trends in the resources sector are now moving into recovery mode, headed by Mackay, which is showing very strong signs of recovery, but that Gladstone hadn't joined the party yet. Prices still falling in Gladstone. Even though vacancies have come down a lot, we still haven't reached the bottom of that market yet. So anyone wanting to pick the right time to jump into that market, I think it still hasn't quite got there yet. Has to do it soon, sometime in 2019, hopefully. And finally, markets to avoid, we talked about the Darwin apartment market. Darwin's been one of those downturn markets, while Sydney and Melbourne's been booming. Perth and Darwin have been declining, but whereas Perth is showing signs of moving into recovery phase, Darwin isn't there yet. And its apartment market in particular, prices in the last 12 months have fallen. All the research sources have apartment median prices dropping 10, 12% in the last 12 months, continuing a pattern over the last few years. Vacancies are still too high and demand is very weak. And so that was basically the little snapshot. We in sort of 4 minutes or so is all we had, because they do keep those segments and those TV programs very short and snappy. So that's all we had time to cover, but it was an opportunity firstly to comment generally on the reality that there are some very strong growth markets around Australia, notwithstanding the decline in Sydney, which is getting all the publicity. We got the opportunity to talk about how useful we find the price predictor index as a tool for identifying the markets where prices are going to rise and where they're going to fall, and the opportunity to nominate some examples of rising markets and also some examples of falling markets. So it was a good opportunity. If you didn't see it, I thought it'd be useful to give you a snapshot of the sorts of things we're able to talk about and to reiterate just how valuable that price predictor index is. We publish it quarterly. The latest edition was published recently, urge you to have a look at it if you're interested in finding out where in Australia markets are rising, where in Australia markets are falling, and also the ones that are kind of moving sideways. There's lots of very consistent markets out there, ones that neither rising and falling, just very steady. And those are also valuable markets to know about because they tend to be very safe places to buy. That's it for now. Terry Ryder signing off. Let's do it again soon.